look at their performance over. Let's look at their year-to-date performance. Oh my god, a cliff. Yo, a cliff, dude. Look at this. The IPO. This I'm sure this is around when they IPO. Like I said, they IPO this year. They IPO around $100,000 a share, and then just 33.95. Just getting crushed, guys. This is why I say fundamentals matter, dude. Fundamental matters, and I just can't let this come. Yo, what's good, guys? It's your boy RIVN back with another very special, powerful video. In today's video, we're going to be discussing stock market top news, okay? The top news from last week, and even discuss some of what's going to be expected going into next week, some of the key data points that are going to be given to us next week, and really how we should be navigating these markets. I know now is extremely difficult to really implement successful strategies in today's market environment. There's so much going on. So I think as elite millennials, we should be engaging in these dialogues, discussing those events and how we are navigating those events and the best way to navigate those events. So that's what we're going to be talking about in today's video. But before we get into today's video, please be sure to like, comment, and subscribe if you are an elite millennial seeking to be and will be the first multi-millionaire in your family. This is a channel you want to subscribe to because I post all things business, all things finance, all things entrepreneurship, all things self-development, and all things fucking crushing it. So like, comment, subscribe, and let's get right into it. All right, guys, so like I said, this video, we're going to be discussing some of the top news that's happening in the global macroeconomic environment and in the stock market. But before we even get into any of that, I do want to share this with you guys because this was one of my more recent accomplishments. And as you know, guys, as elite millennials, we're always striving to improve, right? To be better men, right? And better women. So I like to share, I want to share my accomplishments with you guys, and if I can motivate any of you to share your recent accomplishments, that would be awesome as well. But I do want to share this with you guys really quick. And I know this is a new format here, so bear with me if the transitions are kind of clunky, but I fucking passed the CFA level 1 exam, guys. I passed the CFA level 1 exam. I studied fucking 8 months for that exam. So I just want to share this with you guys. Congratulations. We are very pleased to inform you, and they spelled my name wrong, by the way. That's not how my name is spelled. Congratulations. We are very pleased to inform you that you have passed the August 22 level 1 CFA exam. The pass rate for this exam for the month of August 22 level 1 was 37%. Okay, there was a 37% pass rate on this exam, right? And to be honest with you, that's slightly higher than what it was the previous 2 exams, I believe. I think the lowest pass rate that as of recent was 25%. I think that was last year sometime. So this is a huge accomplishment for me, guys. Like I said, I spent 8 months studying for this fucking exam. In financial services, it's known as one of the most difficult exams that you can ever pass. It's equivalent to, if you pass all 3 levels, because there's 3 levels, it's equivalent to, it's better than, and not equivalent to, sorry, it's better than earning your master's degree in finance, getting your PhD in finance. So this is a huge step for me. Like I said, I spent 8 months studying for this exam. It was a huge sacrifice. Literally every day afterward, mind you, I work 5 a.m. to 2 p.m. every day. Every single day afterward, I had to, not only go to the gym, but then spend the next 3 hours of my evening studying. Right, so I spent 3 hours of the evening studying every day for damn near 8 months. Granted, I did miss a couple days, right? But for the most part, I probably studied 95% of the time, 3 hours every single day. So it was a huge sacrifice for me. And, you know, if I can encourage any of you guys, right, just because something's difficult, that's probably more of a reason that you should be doing it. Like, I know for me and my goals and my aspirations with finance, I know that in order for me, because I didn't go to an Ivy League school, right? I went to a decent university, but not an Ivy League university. In order for me to compete with these Ivy League guys, you know, who are fund managers and work in a private equity space, I would have to, you know, earn some type of certification or something to show that I am in the elite class of this field. So yeah, I wanted to share this accomplishment with you guys. I just received it a few days ago, but yeah, I just wanted to share that with you. All right, guys. So the first article I want to touch on here is so last week OPEC Plus, and OPEC stands for oil, petroleum, and exporting countries. Last week OPEC announced that they were going to be slashing oil production by 2 million barrels a day. Okay, and this shocked the markets. It had a huge impact on the volatility with crude and Brent oil prices. And this is largely due because, as you guys know, oil and gas prices over the past 6 to 8 months have spiked tremendously. In fact, towards the beginning of the year is when all the volatility really started in the oil and gas markets, largely due because of the war between Russia and Ukraine, and also COVID-19 as well, right? Really what we've seen with the COVID-19 is, you know, obviously things were shut down, the economy was shut down, small businesses had to shut down, businesses had to shut down during the crux of the pandemic. And sooner than anticipated, when the vaccine came out and things kind of opened up prematurely, and it caused a huge spike in demand across all types of commodities, right? So we've seen commodity prices spike all across the board, oil and gas being one of those commodities, Brent crude being one of those commodities. So we're coming off the back of the demand spike and the increase in oil and gas prices from COVID-19. And then the Russia-Ukraine war happened, and Russia is actually a part of OPEC Plus and is I think they're the second largest exporter of oil and gas next to Saudi Arabia globally, right? So that's obviously a huge issue when the largest exporter of oil and gas is being annexed by, you know, the entire European Union and the West. And so that's obviously had a huge impact on oil and gas supply as well. Right. So we've already seen oil and gas prices spike. It's been the talk of the town. Everywhere you see it, if you go to your local gas station, it's everywhere. We already know this. So when OPEC came out last week with this very unfortunate news that they're going to be slashing oil production, it left a lot of us questioning why, right? Why are they doing this? Even the White House came out and made public statements against it, speaking on how ridiculous the decision was and is for OPEC to be slashing oil production during a period of time where oil and gas is already at close to near record highs. And so this article kind of gets into it a little bit, but really the main reason that OPEC Plus is doing this is because obviously Russia is a part of OPEC Plus. Like I said, Russia and Saudi Arabia, whom are both a part of OPEC Plus, are the two largest oil and gas exporters in the fucking world, okay? So obviously OPEC, they're not going to allow Russia to be annexed and marginalized by the European Union and the West. And, you know, there's been talks about, so the EU is essentially trying to screw over Russia, right, to essentially prevent them from continuing the war in Ukraine. And so NATO and a bunch of other countries in the European Union have all collectively agreed on these oil and gas price cuts, essentially, where they're like, at first they were going to completely stop purchasing oil and gas from Russia at all. And then I guess they realized that was not even actually possible. So then they agreed on price cuts. So that's something that, you know, is going on as well. So this move by OPEC appears to be in retaliation and against this annexation that's happening with Russia globally. So we can read a little bit of this. The Organization of Petroleum Exporting Countries and Russia-led allies agreed on Wednesday to slash output by 2 million barrels of oil a day. The move drew an immediate rebuke from the White House, which called the decision short-sighted and suggested the 23-member group, collectively known as OPEC Plus, was actively supporting the Russian President Vladimir Putin. Newsflash, they are. Newsflash, Russia is a part of fucking OPEC. So this move is not a big surprise to me. And it's, to be honest with you, it kind of just feels like once again, I think it's the weakness of the U.S. as a global power is being shown, right? I think we import something along the lines of 10% of all of our oil and gas from Russia. So when we annex Russia, essentially we annex 10% of our supply, which is another reason that you saw oil and gas prices skyrocket. And oil and gas prices have been settling as of recently. But definitely with this happening, you can expect oil and gas prices to obviously appreciate. I think there's even some in this article they speak on some price estimates, but I think the expectation is Brent crude to spike to above $100 per barrel. Here we go right here. After surging above $100 a barrel in the first 6 months of the year over Russia's invasion, Ukraine oil prices had fallen 32% over the past. Brent rose more than 2% in $93.90 on Wednesday, after having risen steadily on expectations of production cut in recent days. The OPEC Plus decision came against a backdrop of slowing economic growth globally, okay? And I think that's the big issue here. And that's the big concern here, is because globally, we're already seeing the broader global economic landscape begin to contract, right? We have the Fed globally, right? We have the Bank of England recently raised rates. Obviously, the US is raising rates. The Bank of Canada is raising rates. So globally, we're starting to see this global tightening with monetary policy. We know that inflation was recently at all-time highs. So we're moving towards a period of contraction. You know, the shitty thing about this is, yes, the Fed's raising rates, monetary policy is beginning to become more tightening. The consumers, we will eventually feel it. And I think the data suggests that we already are starting to feel the impacts of higher prices, higher borrowing rates, which we'll go into an article on mortgage rates as well here. But we are already starting to see the impacts of this global tightening. And how do you think higher oil and gas prices due to this oil production cut is going to impact an already tighter everyday consumer budget, less discretionary income consumer, right? Higher borrowing cost consumer, right? So this is really, like I said, this shocked the markets last week. And I think it's definitely something to keep an eye on. I do want to show you guys this. So me, when I heard this news, I'm like, well, how can I take advantage of it? And to be honest with you, I'm not the most active investor, okay? Like, I'm pretty passive with my portfolio. I have some long-term buy and holds. Right now, I'm implementing a sector rotation strategy where I'm moving out of more cyclical sectors that tend to perform well when the economy is doing well, and I moved my assets into more defensive-based sectors of the market, consumer staples, healthcare, utility, things like that. And I made a video about that, check that out. So I've already begun to move my assets into more safer areas of the market. Once again, I'm more of a buy and hold investor, but anytime I do see opportunities like this, where obviously OPEC slashing oil production by 2 million barrels a day is huge news. You can expect, with the reduced amount of supply in the market, we can expect oil and gas prices to spike. As investors, as elite millennials, we can take advantage of that. So the first thing I asked myself is this, okay? I looked up on Google, and I'll actually pull it up here. I looked up on Google, triple leveraged energy ETFs, okay? And I encourage you guys to all do the same thing. Essentially, a triple leverage ETF is whatever that ETF is tracking, if it's triple leverage, it's going to do 3 times that. If it's double that, if it's double leverage, it's going to do 2 times the performance of whatever that ETF is tracking. So a more speculative, right, bet on this would be a triple leveraged ETF, right? If we know oil and gas prices are going to be spiking due to this oil production cut by OPEC, we can take advantage of it. We know that energy prices are going to surge. Energy stocks are going to surge off of this news. So the first thing I did as an illegal linear, as someone who uses my fucking brain, is I'm like, well, let me take advantage. Hold on. Okay, can you guys see me? Cool. Okay, so I looked up leveraged ETFs in the energy sector and came across here. And I don't know. I don't know why it's not showing these here. Here, we can find something else. Bear with me. Leveraged energy ETF list. Here we go. Yeah, I went to this one. Okay, so here is a list of essentially 3 times leveraged ETFs. Gush, which is actually the one that I purchased. Mind you, I'm not a financial advisor. This is not financial advice. Do your own fucking due diligence. But this is one that I purchased, Gush, ERX, DIG. Let's look at some of these here. Let me actually close out this. This is like slowing my shit down. Let's close out of that. And we'll go here. And I'm going to show you guys this. So this is actually the one, the ETF that I recently purchased. Once again, I think this is a 2 times leveraged. Yeah, Direxion Daily, S&P Oil and Gas Exports and Production, bullish 2 times, right? You see that 2X right there. So I purchased this one recently. Oh, I don't like that. And we'll just look at the past 5 days on that. I don't like that. Right. Okay, so what you guys can see is clearly, ever since OPEC announced the price cuts, this ETF has outperformed. It's done very well. I think it's going to go significantly higher. When I'm looking at an ETF like this, the first thing I looked at is the 52-week highs. The 52-week high is at 257.76. So this is trading well below its 52-week highs. And that's as of June 8th, right? So it's not even that long ago. That's probably when oil and gas prices did spike and it did start to come down. We did start to see some easing there. But I do think with the recent announcement of this OPEC oil production cut, we can anticipate oil and gas prices spiking again, which we're already seeing. So this may be a good chance, at least this is how I'm thinking. This could be a good opportunity to check out some of these oil and gas ETFs, okay? Yeah, so, just some free game for you guys, Okay, anyway, so this was one of the biggest headlines that came out last week. Once again, a very, very terrible time for OPEC to announce this because we've been getting screwed at the pump, basically, right? I think here in California, you go to a gas station, you're paying $6 a gallon for gas, right? So for us to get this news, we should be anticipating oil and gas prices going even higher, okay? Unless the U.S. steps in and tries to, I don't know if they could forcefully prevent OPEC from these cuts or whatever it may be. I do want to mention, I read something in this article in regards to the U.S. in response to OPEC making this announcement, essentially released like 10 million barrels of oil and gas from our reserves to essentially subdue the spike in prices that we were expecting to see. But it didn't really make much of a difference. And it's a very short-term solution for a problem that may be persisting for a while. So definitely keep an eye on oil and gas prices, okay? With this recent announcement, like I said, we can anticipate oil and gas prices to continue to increase. We've already seen it since the announcement on Wednesday. it's probably going to get significantly worse. So I did want to touch on that. Let's move into the second piece of news here that's also very important, okay? And last week was not the best week for the market. Pulling up an article here, I'm going to close out of this. Dow falls more than 600 points following the jobs report. So last week we did get the jobs report, and I actually have it pulled up here on my screen. I'm going to maximize this. So on Thursday of last week, we got the jobless claims reports. And essentially the jobless claims report, it lets us know the number of people. It's a weekly number, so it comes out every single week. It's a weekly number, okay? And it tells us the number of people who have filed for unemployment claims, okay? The number of people in the United States who have filed for unemployment. See, as it says here, definition, new unemployment claims are compiled weekly to show the number of individuals who filed for unemployment insurance for the first time. It also says an decreasing trend suggests a deteriorating or improving labor market. So if basically, plain and simple, if this number goes up, if unemployment claims increase, it signifies a deteriorating labor market. If unemployment decreases, if jobless claims decreases, it signifies an improving labor market, okay? So let's take a look at last week's numbers. The prior number that we got, so the prior week prior to this last week, was initial claims level was at 193,000 for that week. Looks like it was revised down to 190K. The estimate for last week was 203,000, okay? It actually came in at 219,000, which means we had more people filing for unemployment in that previous week. Okay, it came in at 219,000, which was a 29,000 increase from the prior week. Now, once again, we said an increasing trend suggests a deteriorating labor market. So this is actually bad news, right? We're seeing unemployment claims increase from the previous week. This would traditionally be considered bad news. It'd be considered bad because it shows that the labor market's getting worse. People are out of work. Typically during periods of recession or contraction, you see unemployment claims rise to 12%. I think during the pandemic, it hit about 13.5%, right? So unemployment during the pandemic was at 13.5%. During periods of economic recessions, depressions, economic contractions, you see this number skyrocket. You see the unemployment rate skyrocket, okay? So obviously this is a week by week number. It has to be taken with a grain of salt, but over time, you look at the long-term trend and it starts to speak to you a little bit more, right? So traditionally this would be bad information, okay? Initial jobless claims increased 29,000 to 219,000 in the week ended October 1st, coming in at the top end of expectations in an Econ Day survey that had ranged from 195 to 220,000. Okay, so more people filed for unemployment that week, a sign of a deteriorating labor market. However, this right now is good news for the market. Crazy, right? We get negative data like this, the market outperforms. Okay, traditionally. And we can honestly look at what the market did on this day, but given the global landscape today in today's market, negative news is treated as good news and good news is treated as negative news, okay? And the reason why is it all comes back to monetary policy, okay? Monetary policy. Monetary policy just means the Federal Reserve increasing rates or decreasing rates, okay? Now, traditionally, when the Fed is increasing rates, which is what they're doing now, it's considered a negative event, okay? It's considered negative, it's bad. We do not like rising rates, largely because it contracts the economy, largely because it contracts the consumer, largely because mortgage rates skyrocket as the Fed raises rates, borrowing costs skyrocket as the Fed raises rates. It contracts the economy. People have less money in their pocket. Demand takes a hit. Corporate profits take a hit. And the economy typically tends to contract when the Fed raises rates. Okay, so we don't like the Fed raising rates. And the Fed has been very vocal. Okay, they've been very vocal. They're trying to tame inflation. The Fed is trying to tame inflation. And they're very clear. They're very clear. The Fed is going to continue to raise rates as long as inflation is at elevated levels. And they've also been very vocal about some of the key data points that they're keeping an eye on to determine whether they're going to stop raising rates and begin to taper. Okay. And one of those data points is the job market. Okay. It's been said over the past 6 to 8 months that we've had a very tight labor market. By tight, meaning there are more jobs available than there are people willing to work. And typically situations like that drive wages higher, right? Because companies begin to increase wages to attract more employees. Simple, right? It makes sense. No one wants to work. Let's raise wages to attract more people to the job market. Okay. So the labor market is very tight. Unemployment is very low. And when the labor market's tight and when unemployment is very low, it's a very bullish sign for the broader economy, right? If people are working, people are earning more, that essentially is an environment for inflation to persist, okay? That's an environment for inflation to persist. Now, I just told you, the Fed is trying to tame inflation. They want to bring inflation lower, okay? And inflation was at like close to 9% a couple of months ago, guys. It started to taper a little bit, but inflation is still very, very high relative to historical records, okay? It's at a 40-year high, and the Fed is very adamant about taming this. So they're gonna keep raising rates until they tame inflation. Now, like I said, a fruitful and a tight labor market is going to only cause demand to continue to persist, which is going to continue to drive inflation higher. So essentially what I'm saying here is as long as the Fed continues to see that the job market, that the labor market is tight and prospering, they will continue to raise rates. Plain and simple. They've been very vocal about it. They're not going to stop until the labor market starts to deteriorate, okay? So once again, as I mentioned at the beginning, good news is bad news, and bad news is good news in today's environment. So this bad news, the fact that we saw an increase in jobless claims of 29,000 in the week ended October 1st, is good news. That means that we're starting to see some softening in the labor market. So this is positive news. And we got this news last Thursday. Very, very positive news, even though it's negative news. And I know that's kind of trippy to think about, but it's just it's just the facts, okay? This is considered positive news in today's environment. So we got this news on Thursday. These are things that you guys want to stay on top of, because literally it's going to determine the economic landscape for the next 12 to 24 to 36 months. Facts. The Fed and monetary policy, the Fed single-handedly has the ability to crash the fucking global economy. Simple, right? So it's important as elite millennials that we stay on top of this data, digest it, and use our brains to say, okay, where are we headed? Right, so this is some negative data, which is good data in today's market, because we don't want the Fed to continue to raise. Okay, moving forward. On Friday, we also got the employment situation. So this is non-farm payroll. This is arguably bigger than jobless claims. Like I said, jobless claims comes every week. Non-farm payrolls is a monthly number. Okay, so non-farm payrolls month over month. Prior was 315,000. Essentially, non-farm payrolls just measures the number of jobs that we've added. Okay, how many jobs were added in that month. So in August, we added 315,000 jobs. We anticipated adding 250,000 jobs in September. We actually added 263,000 jobs. So there's two things happening here. Number one, we beat our expectations, but if you look at the consensus range, it's from 220 to 340. So it was actually within our consensus range, but our actual consensus was 250. But because it's within our range, this isn't any new information. The market's not likely to react significantly to that, even though the market did collapse. Like the Dow was down 600 points on Friday when this data came out. So the market still did react adversely to this information. Okay, so we see non-farm payrolls in September. We added 263,000 jobs, okay? The unemployment rate was at 3.7% in August. And in September, we estimated that it would stay the same at 3.7, but it actually fell to 3.5%. Now, what did I just tell you guys? Okay, good news is bad news in this environment. Bad news is good news, okay? So the fact that the unemployment rate fell in September from 3.7% to 3.5%, that means the percentage of people participating in the labor market, those percentage of people who are unemployed fell. So there's less people unemployed than there were a month ago. Now, I just told you, we're in a tight labor market. That means that we added more jobs than we lost, essentially, in the month of September. So the unemployment rate, less people are unemployed in September than they were in August, which is a good thing, okay? This is traditionally, this is a great thing, right? We want to see the unemployment rate decline. You want to see people working, but it's not a good thing when inflation's at an all-time high, okay? It's not a good thing when inflation's close to 9%. It's a bad thing. So once again, good news is bad, bad is good. This is good news. The market reacted adversely. The Dow was down 630 points. You can see it right there on Friday. S&P was down 104. NASDAQ was down 420. So once again, yeah, this is bad news, guys. This is not what we want to see. We actually want to see the labor market deteriorating. We want to see this unemployment rate increasing. We want to see less jobs being added than anticipated. We want to see the labor market begin to deteriorate because that's going to motivate the Fed to stop hiking rates. Okay, so we want to see inflation curve back. We want to see the job market start to deteriorate. We want to see consumers, as bad as this is to say, we want to see consumers spending less. And right now, we're just not seeing that. So I did want to touch base on these two numbers, right? We got the job report on Thursday. We got the job report on Friday. These things both equally. So this was actually good. The jobless number was good. But what's more important is the employment situation, a non-farm payrolls number, the unemployment rate, spiked a lot of volatility in the market because once again, good news is bad news in today's market. So I didn't want to touch on that. I'm going to touch on a couple more things here. Something I did want to touch on really quickly is RIVN, okay? RIVN, and I made a video about RIVN like months ago, probably like 6 months ago at this point. Fucking RIVN, man, this company, let me see. What's their ticker symbol? RIVN, I think. RIVN. RIVN. So this company IPO'd this year, and it had like a ridiculous valuation, like a $70 billion valuation when they IPO'd. Look at that. Even look at the metrics here. A negative 7.76 earnings per share. That's terrible. So originally when this company IPO'd, I made a video basically trashing the company because there's no reason a company that hasn't sold any vehicles should have a larger valuation than General Motors, than Ford. And at that time it did. And it was absolutely ridiculous. Like the tech bubble all over again, right? So I made a video essentially saying the company was overvalued. And even since that video, there's been a bunch of negative news articles that have come out about the company. But this one just recently came out yesterday. And I couldn't help but freaking just laugh to myself, because this company, dude, is struggling. RIVN recalls nearly all of its vehicles due to loose fasteners. Wait, so first you're barely selling vehicles, and now you're recalling all your vehicles. This is ridiculous, man. This company is struggling, guys. RIVN Automotive is recalling nearly all of its vehicles to address a potential problem that could cause drivers to lose steering control. That's terrifying. The latest challenge for the fledgling EV startup as it expands sales of its first models. Jesus. The electric truck and SUV maker said the recall was made after it discovered a fastener connecting the upper control arm and the steering knuckle may have been improperly installed. The recall campaign covers about 13,000 vehicles built in late 2021 and through September of 2022. 13,000 vehicles. And there are no known injuries related to the defect. The company spokeswoman, of the population of recalled vehicles, RIVN estimates 1% are impacted by this defect. Okay, so it's not all the vehicles, but they do have to recall all the vehicles just to, make sure, just for safety purposes, right? To check them all. But still, I mean, this company, guys, RIVN, I don't know if some of you guys are fans of this company, but they have just struggled, bro. Struggled so bad. Let me see. Let's pull up a chart of RIVN and look at their performance. RIVN. Look at their performance let's look at their year-to-date performance. Oh my God. A cliff. Yo, a cliff, dude. Look at this. The IPO, I'm sure this is around when they IPO. Like I said, they IPO this year. They IPO around $100,000 a share. And then just $33.95, dude. Just getting crushed. Guys, this is why I say fundamentals matter, dude. Fundamental matters. And I just can't with this company, man. But anyway, that's RIVN Technology. I want to touch on that. The last thing we can touch on today as well is Tesla, right? Twitter and Tesla. So as you guys know, Elon Musk a couple months ago said he was going to be buying Twitter, essentially. And then the deal kind of fell through because he found out that Twitter had a bunch of bot accounts and they weren't being honest about the number of bot accounts that they had on their program, on their platform. And so the deal fell through. And then there was some issues because technically you're on the hook legally to some degree to follow through with that deal, right? And I think that deal can be enforced. So essentially Tesla was going to be forced. There was going to be some type of litigation between the two companies to essentially enforce the deal to go through. So it's kind of been an on again, off again type thing. But recently, some news came out last week. We'll just read this. The on again, off again deal between Elon Musk and Twitter is somewhere between on and off again. The billionaire on Monday offered to see through his original $44 billion deal to acquire the social media company. But on Thursday, a Delaware judge presiding over the class postponed a trial in the matter, giving both sides until August 28th to close the deal or schedule a November trial. Twitter shares surged 22% on Tuesday. I honestly would never buy that shit, bro. To be honest, I would never buy Twitter. It's just too much, bro. Like me, like I said, I'm a very passive investor. I truly don't believe that you can active portfolio management leads to alpha. I don't think you can beat the market with active portfolio management. I think all the data tells us that 80+% of hedge funds fail to beat the benchmark. So this isn't new news. And then when you couple in management fees that you pay for these funds, you're better off investing in an S&P 500 ETF and just buying and holding. That way you're avoiding management fees and you still get to at least participate 1-in-1 with the benchmark. But anyway, I would not buy Twitter at all. Once again, make your own decisions. But yeah, this whole thing with Elon Musk and him going back and forth with Twitter, first off, it sucks for Tesla shareholders. Like, I own Tesla, and I feel like every week Elon Musk is in the media for just something ridiculous, which puts a huge damper on the Tesla stock. Like, Tesla is oh my God, so bad, bro. Like, this was on Friday, it looks like, just got crushed. If you look at the past 3 months, I know they went through the split recently, but it's just like, dude, Tesla is just, it's honestly one of my favorite stocks because it's one of those securities that you can literally make hundreds of dollars in a single day just buying one share. That's how much volatility is. Ever since the recent split, though, you haven't really seen as much volatility with Tesla. Meaning, when I say volatility, I just mean the range of movement within a single day. But yeah, I just feel like every week, man, Tesla, Elon Musk is in the media for just something ridiculous, right? Like whether it's his support of Kanye West, which I actually fuck with Kanye heavy, whether it's him and his whole Twitter thing, whether it's him just saying something that's extremely unpolitically correct. Like, I feel like Elon Musk is in the media for something adverse every single week. And every time he says something stupid, it impacts the price of Tesla. But I don't know what's going to happen with this Twitter acquisition. Do I think it's going to go through? Yes, I do. But once again, looks like there's going to be some delays. They said October 28th. It's going to be delayed until October 28th. So that's going to be the tail end of this month. I do think it's going to go through, but it's going to be a headache until then. But anyway, guys, I'm going to cut this video here. More content like this coming to you guys soon. Once again, I love talking about this stuff. This is what I'm passionate about. I love finance. My career is in finance. I will be a fund manager. I will be a CFA charter holder, right? So I love talking about this stuff. And I want to encourage you guys, you don't have to study finance to be interested in stuff. If you are a late millennial, you should have an investment portfolio. You should be avidly staying up to date on this information, right? Get yourself a Wall Street Journal subscription. It'd be awesome if I get sponsored by Wall Street Journal. That would be fucking dope, dude. But anyway, yeah, guys, like, comment, subscribe. More content coming soon. Let me know what you guys think about these topics that we touched on: the OPEC oil production cuts, the jobs report data, and then also RIVN and Twitter. Let me know what you guys think about these things. Like this video, comment on this video. Your boy Rare, subscribe to the channel. Peace.